Hello, everybody. This is Noah and John, and we are from UrbanDigs, and this is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. Let's take a look at actively updated supply. The last time we'll report on this number, 6,019. Johnny, show me that chart.
Yeah, so again, this is actively updated supply. We're going to be shifting to a total metric of supply the next week. So I'm actually looking forward to seeing what those charts look like. But just again, going back to actively updated here, it's down 6% on the week, and that's exactly what you're going to see in summer. So really no surprises here, Noah.
Yeah, and you add in the fact that this market's shifting and off market tends to rise in shifting markets. And in addition, new listings, new listers tend to fall. Sellers just don't want to be part of a market that's shifting down. That's just the nature of down cycles in our market. So we'll keep a track of that new listing activity as we go on, Johnny. Let's shift to pending sales, measure of demand, 4,272. Johnny, show me that chart.
Yeah, and that's also down. It's down 4.5% on the week. And this is, I think, the 7th week in a row that we've seen declines on a weekly level for the Manhattan demand number. And again, like supply, this is really not a surprise. No, we're at the peak of summer, and I would expect this number to continue to sort of, wind its way down until we get to September, even October. I don't expect to see a tick up in this number for a while.
Yeah, this is going down. This is going to take the elevator down. This is going to happen quick. Looking at weekly deal flow, which we'll get to in a second, and looking at monthly deal flow, you have to understand that this pending sales is a 6-month measure. You signed a contract 5 months ago, you in it. Signed a contract 8 months ago, you're out of it, kind of a thing. So this has the bulk of the peak activity probably still in it. And as time goes on, that's going to fade out as those pending sales close. So this number, it needs the front end. It needs the front end of the pipe that's feeding it contracts. It needs a lot of those. And if there's not a lot of those coming in the front end, it's going to go down. So this is going to go down for months. It'll be a grind. I agree with you. Johnny, let's go over to the weeklies and take a look at what's going on there. Maybe we can break this down a little further. Start with supply. 313 things came on the market. Johnny, show me that chart.
Yes, 313, that's a tick up of almost 90%. And again, last week was a holiday week, so you can't, read too much into that. Just the idea that the takeaway here now is 313 is really something you're going to see in the summer. You're going to see that also in the holiday weeks of the winter. So not a lot of new listings coming on. It's still a healthy amount in terms of what you'd expect to see. It's down 10% from the year ago level. But it's summer, so don't expect a deluge of new listings for quite a while.
Yeah, and that's what the whole thing is, right? You would think that if the market's going down, that the seller pool is expanding, and it very well may be, but it's summer. And no, we just don't have a lot of listings coming out in the summer, so we'll deal with it. This is what the number that's most important to me. Contract signed, 7-day contract signed, rolling pace, 178. 178. We've been doing this a long time, Johnny. We haven't been down to this level in a long time. That's down sharply. Show me that chart.
Yeah, and maybe you could blame some July 4th action on that. I mean, I think that's a little cheeky, but I mean, think about this. This is the 9th week in a row we've had lower. I mean, the market's shifting down, but when you put this into perspective, Noah, we are right almost exactly where we were in 2019. So it's not so much that the market is dead, as the market is just back to normal.
Yeah, and well, I mean, when we're going so fast, it feels dead.
Yeah.
I guess the thing for me is that we're still finding our way. It's not like we've bottomed here. The bid has dropped. The spread between bid ask is wider. Sellers are saying, what's going on here? Where's my bid? And brokers are trying to get those two together, and it's not as easy as it used to be. So the question really is not so much what it is now, but where is this thing going? And that's the trend that we're looking at, and it's going down. So let's go shift. And I want to put this into perspective. I want to put this in because this is a demand situation. And if you want to be a leading indicator, you got to focus on those bids, got to focus on demand. And when I take how many contracts were signed in June this month, and I compare that to June of last year, we are down 27%. Okay. So that's what this chart is, Johnny. It is showing us down 27%. And when you go back in time, and you look at monthly year-over-year change, just like we did there, this is what that chart looks like.
Right. I mean, but the idea is that you zoom out. Even if you zoom out a little more, you can see that the recovery numbers were just. I think stratospheric is not even a good word. I mean, these are outer space numbers, right? 887% year-over-year for May 2021 compared to the dead stop almost of May 2020. I mean, so the massive amount of deal volume that was done last year makes these months of April, May, and June look pretty timid in comparison. But you know, in
Yeah.
reality, if you just zoom out and then you start looking along the lines of what those red bars look like, they're not that bad, Noah.
Yeah, I just zoomed out here. It's an incredible chart. It's an incredible chart. And you know what? I could define normalcy. I could define normalcy right here. And you could see we're just a little above, we're a little below. We go right near the speed limit, a little fast, and then you could see, wow, okay, 6 months down for COVID. 6 months down for COVID. 16 months up for the recovery. So you know what? We just started our downswing right now. We're in the third month of it already. So again, we've already shifted. This is what we're looking for. And if I'm a buyer out there, or if I'm a broker out there, you send this out to those buyers. You tell them, I'm waiting for that red line to come down, 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 and then start to bounce back. And that's going to be the buy signal. And, I don't know how far it goes. Yeah.
Well, and I'll tell you, look at the far left of this chart, right? I mean, this starts in January 14, so it's comparing 2013 data to 2014, and you look at what the market was doing in the spring of 2014. It was down, and that's right before we started ramping up into the peak. So I'll just say, we're regardless of where the market goes, right? The fact that we're down now does not necessarily mean that we can't be up massively in the fall. We could be down, but I'm just saying, just because the market's down on a year-over-year basis now does not mean that it's down and out. It is what it is. And, where that deal flow is going to go, we're not sure, but it could certainly go higher. It could certainly go lower, but
look, the market's going to do what the market's going to do, whatever it wants to do it, and we're just going to be sitting here analyzing it. I guess I just want to point out that, this was a 6 month cycle right here. This was a 16-month recovery cycle right here. I think the thought that this will be 3 or 4 and then that's it is probably more hope. After going through this much of a recovery cycle right here and seeing the shift in macro that's going on right now, we might have, in my opinion, a 5, 6, 7 month downtrend, especially related to this. And that's the thing, is now we're about to go into July and August. We're relating it to these numbers right here.
Right.
This number right here and this number right here. So as time goes on, this is most likely going to be red.
Right. And I think that's my point, is that even though these bars are going to be red because we're comparing it to massive numbers, the deal volume in the upcoming months could still be fairly decent, could still be on par with what you would normally expect in a typical market. And the biggest issue that to me is that if you've got a seller, show them this chart, because that deal volume that created those gigantic green bars has gone away, which means that you seriously need to be considering what your competition is at this point, simply because that the rising tide has sort of that lifts all the boats is no longer there.
Yeah, and I just want to point out what John is saying. Okay, we were doing 1,800 deals a month, 1,800 deals a month at this point of time when the green bars were up. Okay, this ticker showed that, so you could see that. So now we're at 50%, or I guess 55%, 55% of where we were. And John, I mean, let's just end it. Where do you think this is going? Where do you think we went down to 150 during the shutdown in COVID? Okay, we were at 1,800. We've spent the majority of the recovery around 1,400, 1,500. We were at 1,500 as recently as March in this contract signed, and we have just dropped. So now, where does this go at its bottom?
The contract sign number, I think it goes back. I think it goes back to long-term seasonal averages. But what's catching my eye, and I know this is our weekly update, and we usually try to keep this under 10 minutes long. But I just like to point out, off market is up quite a bit, and I think that's interesting when you try to take this market. This is a number that not a lot of people talk about. Not a lot of people sort of figure this out in terms of what that necessarily means. But to me, it means that sellers don't want to participate in this market because why sell in a declining market, or maybe a declining activity market? So if you're a buyer, well, what does that mean? It means you've got really less stuff. So even though we have supply does tick up on the weekly level, even if supply is sort of quiet for the summer, it is still shrinking in terms of what the buyer's actually going to see. And to me, that's an interesting thing to think about.
Yeah, less ready, willing, and able sellers. Right. And that's what happened during COVID. It was hard to get them to hit that bid down 10, 15%. And you're exactly right. And when the market goes down, things go off market, less stuff comes on. I'm going to come out here and give you a bond. I'm not going to, you're going to back away from this, Johnny. I'm going right in. I think we're going to go down to the 700s. I think this is going to go down to the 700s. All right. If we go below,
I think we
that,
have two. Well, I think you're right. I don't disagree. I think we have August and September, two of the quietest months ahead of us still.
right.
Not to mention July. So we have three quiet months ahead of us.
And that's exactly my thinking.
Yeah.
And that's exactly my thinking. So when I look at this, until I see evidence that this is turning around, this is falling, and it's the market trying to find its way. And when the market finds its way and the market finds where it is, it's going to stop falling and it's going to come back up, and it's going to be the mother of all buy signals. And that's all I got to say, right? Johnny, thank you for whipping up all these charts. Interesting conversation here. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you got questions, we got answers. Just join our forum right down here. If you want any of the reports Johnny talked about today, it's going to be right over here in just a moment. Other than that, this has been your Manhattan Weekly Market Update, and we'll catch you next time.